If you have been following up with the US stock market since the start of the year, you would have realized that it is nothing but bloodshed. Stocks are on sale from 60% of their all-time highs, and the S&P 500 year-to-date is around 20% on sale. While there are literally thousands of ETFs out there, I have selected 8 which I believe covered all aspects of the US stock market and I believe would be a great addition to your portfolio. Number 1. Vanguard Total Stock Market ETF. Ticker symbol VTI. This ETF tracks the CRSP Total Market Index, which comprises of over 4,000 different stocks ranging from small cap, mid cap and large cap. And if it spans the entire stock market, you are going to know a lot of your favorite companies like Apple, Amazon and Facebook. And when it comes down to expense ratio, VTI is one of the lowest out there. It has an expense ratio of 0.03%, right? And it has performed extremely well. It has an average yearly return of 13.9%. That's a whole lot. So that means if you have invested $5,000 10 years ago and contributed $200 towards it monthly, today it would have valued over $65,000 while you contributed only $29,000. That's the power of compound interest. So moving on to number 2, we have iShares Core S&P 500 Growth ETF or IUSG. This growth ETF is a very popular one. It tracks the mid and large cap growth companies in the S&P 500. This ETF has performed exceptionally well over the last 10 years. It has an average return of 15.25%. That's a lot of growth there. Now, using the same investing amount as before, the $5,000 initial investment and the $200 monthly, your investment would have grown to a whopping $70,000 while investing only $29,000. Now, you see why it is important to invest your money in something that compounds over time, no matter how small it is really. Whether it's 5%, it's better than sitting there in a savings account. And with inflation so high, you have to be investing your money. So moving on to number 3, we have Invesco GARP ETF. Like, who came up with these names though? So when compared to the first two, this one has a smaller holdings of only 77 stocks and its asset under management is just over $850 million. This ETF is relatively new. It was established in 2011, but since then it has an excellent growth rate of 15.91% on average per year. That's really phenomenal. At this point, I don't want to sound like a broken record, but if you have used the same parameters as before, your investment would have grown to over $73,000. So pressing on to number 4, we have the Schwab Large Cap Growth ETF. Like, I'm wondering if I pronounced that name correctly. Schwab? Yeah, maybe. This ETF will offer you a diverse exposure to some of the large caps in the United States. It holds over 200 stocks from the 750 largest stocks in the stock market. These are by capitalization. The goal of this ETF is to track the Dow Jones Large Cap Growth Total Stock Market Index. Some of its top holdings include Tesla, Microsoft, Amazon, Facebook and Microsoft, and you can think of a few others. This fund has a low expense ratio as well. It has an expense ratio of 0.04 and a 10-year annualized returns of 15.51%. So moving on to number 5, we have the Technology Select Sector Fund by SPDR. If you're looking for a little bit more punch to your portfolio in terms of growth, then you might want to look into XLK. Unlike the previous ETFs that I mentioned before, this one is dedicated to the technology sector, and personally I believe technology is not going anywhere for now. Because this fund is not only focused on the technology sector, it tends to be a little bit more volatile than other ETFs or index funds out there. Not saying it is the most volatile, but the technology sector is a bit more volatile than the others. Now with the extreme volatility, you can experience more growth, as well as on the downside you can experience bigger declines. Over the past 10 years, XLK has performed exceptionally well with an annualized return of 19.9%. And remember, most of these ETFs are down an average of say 20% year to date as of doing this video. But it's very important to note though, this fund is heavily invested in Apple and Microsoft, with over 40% of its holding in the two stocks that I just mentioned. Now, using the same investment ratios as before, your investment would worth over $88,000 today if you had invested in this fund 10 years ago and contributed monthly to it. So moving on to number 6, we have EFG. This ETF owns over 450 different mid to large cap stocks all around the world, from countries like Australia, Asia, and Europe. So since it may be hard for any investor to get qualified information from stocks all around the world to invest in them, then owning this ETF would be a great exposure to invest in stocks from all around the world. 10-year annualized performance is not so hot like the previous ones. It has an annualized returns of 7.02%, and that is a bit expected because it is diversified around the world. One economy might be doing good, this moment one might be doing bad. It's not like we're in a specific country now, and when the economy is going good, it is making the progress, but one might be up and then another one might be down, so that kind of drags it down a little bit more. So this one has some very popular names that you might be familiar with. So for example, holding this ETF would give you exposure to stocks like AstraZeneca, you have Nestle, you have Louis Vuitton, and brands like Tiffany. If you want exposure to all of these companies, then this ETF is one for you. At number 7, we have the Vanguard High Dividend Yield ETF, VYM. This ETF tracks the FTSE High Dividend Yield Index. Some of its dividends aristocrats are a name you might be familiar with, like Johnson & Johnson, Procter & Gamble, and ExxonMobil. So VYM over the last 10 years has produced an annualized returns of 11.74%, and that's excellent on top of its dividends. Now the dividend yield for VYM is a little bit higher than some of the ones we mentioned before. It sits at 0.08%. So when compared to an ETF like XLK, which is down around 22% year to date, VYM is only down 4.7%. So it's not so volatile like the others on this list. So number 8, we have iShares Russell 1000 Growth ETF. Now this ETF seeks to track a group of some of the stocks in the Russell 1000 index, with it from medium to large cap, which has the potential to outperform the broader market, meaning the S&P 500. And it seems to be doing just that. It has an annualized 10-year return of 16.82%, and it holds 503 stocks that are in the Russell 1000 index. All around there talks about recession, but one thing you need to know, when there's a crisis, opportunity presents itself. So let them talk about the recession that's coming, but you focus on the opportunity. Thank you for watching. See you in the next video.